my cousin and my dad were telling me, hey, you need to buy stocks. And I was like, I don't want that. It was tanking, it was going down. So
Yeah.
to me, I didn't want to buy anything. And I didn't think, I thought it was like old man type of money. And so, all right, I got this going now. I got it
Okay.
recording. So, my cousin and my dad were trading, and this was back during the pandemic. The stocks was crashing, and I was like, man, I'm not trying to lose money. And they were like, no, this is the best time to invest. And I was just like, and at the time, my cousin showed me a stock, and he was like, man, you need to buy this stock. I'm gonna share my screen real quick.
Okay.
You can see this
Yeah, I can
screen?
see it.
Okay.
Yeah, I can see it.
So, my cousin, he told me to buy this stock, man. I bought the stock. I put $500 in, and then the thing went up, and I
Man,
made money. And
you made
so, like,
1,500 off of it, right?
yeah, and that's when I was like, man, I got to figure this stock stuff out. And
Yeah.
then I dropped myself in here. I read those books, my dad put me on. And then
Mhm.
I just kind of jumped down the rabbit hole. But Bar Chart was one of the websites that I found that combined everything as far as
Okay.
like tools, screeners, news. I start my day here. Like when I first started, this was where I came. Like I'm checking the front page for like news. I'm like, all right, where can I find something that's going on? Because like let's say Michael Burry thinks the market has Adobe stock wrong. Okay, like what's the information on this? So I can like see different insights and perspectives, get some technical analysis. They're gonna break down the fundamentals for you as well as analysis. So that's one side of the puzzle. But then like you want to stop, you can jump over here. They also tools options data. You can see screeners for different strategies for options, and then insider trading is another thing I would kind of look at. Are any insiders buying or anything like that? You can also include politicians into this to see are they buying or selling.
Yeah, I seen it.
But yeah, so for me, it's just like it gives you all the tools you need to sort of go through a deep dive. There's even this one section right here that it gives you trade alerts. So right here, if you were actually looking at this serves you April 23rd. It was a sell signal on the 20-day moving average. And so
Okay.
you can see here, that would have saved you from not buying this dip because before that it was $550. It had already fallen quite a bit. And so some people may have thought, I get a discount here. And this signal was telling you, hey, don't do that. But if you want to check the previous trades, you can come here and say, is this a profitable strategy? Right. So it's like this gives you all the data you need. So before you take that trade alert, you can come through and back test that strategy to say, okay, if I follow this alert, how profitable is this? And you can see, even when it comes to trading, you can see these drawdowns that it takes, right? You know what I mean? So you can see that trading, man, you got to have some guts. Because look at I mean, that wasn't a bad drawdown to make $6,000, $500, but let's say in the case of being down 1,000 and then up 5,000, right? This was the max
Gotcha.
profit on the trade, but when it told you to close it based on the signal, you still stepped away just based on the signal with 3,000, but you would have had to been down $1,000, right?
Gotcha.
And
Gotcha.
so I think if you're interested in trading, the most important thing you got to understand is risk management. Because if you're in
Okay.
there for like, because it's like when I'm investing, it's like I put my money there with knowing that I'm risking losing it.
Yeah.
Like if I buy some, penny stock or something, I can't say that it's going to be around forever. So if I have profit in it, I want to take that profit. But if you're buying a stock like Apple, I'm not necessarily trying to trade the ups and downs, right? And so, for example, if I'm an investor and I'm looking for something to buy, and this is something I do personally, I come and use a screener that I built, which is the S&P 500 oversold. Now, this I can open it up to mid, small, micro. Are you familiar with just like market caps, like
Yeah.
mega, large? These are just telling me the size of the
That's
company,
the
the
companies. Yeah, yeah.
valuation. Exactly. And
Hmm.
so in this case, if I focus on large and mega, I'm looking at established companies, companies that have high valuations, high value, and they've proven that to the market. The market's already said these companies are worth more. And so that being said, these are also going to be in the S&P 500, which means that funds are going to be buying these. So
Okay.
any sort of, mutual fund or like when you go invest through a financial advisor or a
Let's see,
401k.
the big boys.
They're investing in an index,
Mm-hmm.
right?
Mm-hmm.
They're tracking. Their job is just to get you to give them money, and they're going to put
See
it
where
in
they
the
gonna go
glorified
invest in it.
mutual fund of
Mm-hmm.
this tracking the S&P 500. So
Mm-hmm.
they charge you a fee to essentially just track this. And so when they're tracking this, that means that they're also purchasing these. The more people invest in their fund, the more they allocate funds to purchase the stocks that are in these indexes. And
Okay.
so with this screener, I can come in and type, index and choose the index group here. Okay. So I've already had that here. And I can do the NASDAQ, which is more tech. I can do the Dow, which is the top 30. I can do a different sector. Let's say you're interested in healthcare. You see something moving in healthcare. You think the healthcare stocks are undervalued. You can look at that here. You can filter it essentially from here. And so in this case, this screener in particular is the S&P 500 oversold. I'm looking for stocks that are trading lower from a technical sense. So when I tell you that like this is all about supply and demand, I don't want to
Mm-hmm.
chase what's up. Now, if you're a trader, you can do that. You can go chase the breakout type of trades, those momentum, like, all right, a stock is about to reach its high or it's about to reach some level of resistance and it's breaking through that. That's a momentum trade, like a breakout trade. But if you're just beginning, I tell people focus on index, focus on just planting seeds and waiting for them to grow. You know,
Okay.
so in this case, we're looking for great companies that are trading at a discount. We're looking for the Black Fridays. You know what I mean? Like
Yeah, yeah,
essentially, I'm looking for where are the sales in the market.
yeah.
And
Mm-hmm.
so the way for me to find that based on, technicals, one way is relative strength. Relative strength tells me that based on the past, the price is trading lower
Okay.
relative to the momentum here.
Gotcha.
So in this case, by putting 45, I'm seeing stocks that are trading lower on their relative strength, which means that price is closer to what's called oversold.
Okay.
You
Yeah,
familiar
yeah,
with
yeah. Yeah, yeah.
RSI oversold and overbought?
Mm-hmm. Oh, about yeah, yeah, yeah.
So if overbought is 70, right? And
Yeah. Oh, so
oversold
it's
is
20. 30,
30,
30. Yeah,
30.
30.
So if a stock is down at 30, it's technically oversold.
Mm-hmm.
Now that window is very finite, right? Sometimes you might get a stock that'll drop below that and maybe trade in
Mm-hmm.
the 20s, but then it'll rebound. Or if it's horrible, it may stay there for a while. But in most
Mm-hmm.
cases, if a stock is good, it doesn't stay oversold for long. So
Correct.
because that window is so finite, I want to open it up a little bit. I want to see stocks falling towards that direction or coming back from it. Does that
Yeah, yeah,
make
yeah.
sense?
Yeah,
Like
it makes
if
sense.
I say I want to look for stocks that are oversold at 30, what that's the extreme.
Yeah,
Stock,
yeah.
I mean, if I'm looking for a good stock, it may be on there for one day. So that means I got
Okay.
to check this every day. But if I put 45, I can see it beforehand.
Okay.
And
Gotcha.
maybe that stock may not hit 30, but I caught it as it was going
Maybe kind
down.
of
And
turn around, kind of
yeah,
come back
and
up. Yeah, yeah.
if your whole goal is to dollar cost average, I don't have to be perfect. I'm not trying to time the bottom here. I just want a
Okay.
window in which I have opportunity,
Opportunity. Yeah, yeah.
right? I want to know that I'm not paying overbought prices,
All
right?
right.
So in this case, 45 is my sweet spot. 40 is cool, but sometimes I like that 45 because anything below the mid range is cool. 50, you could be pushing your
Yeah,
sub
pushing.
40
Yeah, it's going.
objective.
Yeah, going up.
Yeah, and so and in that case, it may already be back on its move, and that's fine. But in some cases, it can still be exhausted and come back down.
Okay.
So I want to make sure that I can see these in this window. I add a couple of different filters here. This is just showing me data on the column. I don't have to set this. You can if you want, but I don't.
So,
But when I
so
click,
show about my
go ahead.
bad. Show me how you would set yours up, because I
Yeah,
want to. I
this
want.
this this is
Okay.
exactly how I would set it up. So I'm only adding these columns so I can see the technical signals based on short term, long term, midterm, as well as moving averages. So
Gotcha.
if it's green, that means it's above these moving averages. So in the case of this list, in terms of volume, Amazon is about the only stock on this list that's still trading above its 100-day and 200-day, meaning that the stock had a pullback, but it isn't necessarily collapsing, right? It hasn't broken through these long-term trends. So if you're looking for something that is still bullish in trend, then Amazon would be that, right? So what I'll do here, I'll actually put it in order of market cap, right? Because I want to buy the biggest names. I want to know I'm getting a discount on the biggest names.
Gotcha.
And
Gotcha.
so what I can do here is I'll go into flip charts, and this will allow us to actually see these charts. Let me go 2 by 1. No, the other way. 1 by 2. Yeah. So I'm gonna put a template on here. What's a template I like? I like the RSI put call ratio. Yeah. Okay. So these are two things I look at. Couple things on this chart. Actually, it's quite layered, but I think this is my favorite chart template. Okay. Because
We
one
use
thing,
we using the MACD.
yeah. So what
With
I'll
it,
do is I'm gonna do
using
there's no MACD. So I'm
and
gonna break
using
this
moving
down on
average.
one chart real quick so you'll see
All
it on
right.
the chart. So the first is on this chart is moving averages. We have a
Moving average.
20,
Yeah.
50, 100, and 200. Those are
Gotcha.
like when you read those books, they're gonna tell you you're gonna hear a lot about a whole bunch of different moving averages, but everybody is watching these.
Gotcha.
Like a lot of people may tell you, oh, the 19, the 9, the 21. Everybody is watching
Watching
these,
these.
right? So it's cool if you want to do the whole like 921 or whatever other strategies people have out there. But everybody, like I said, is watching these.
Okay.
So I want to know what is the whole. I don't want to be on some island trading my little strategy talking about it's going to hit on the dot, but everybody is watching these. So sometimes you may have stocks that react to the 200. Some of them may react to the 100, but I want to see all of them so I can determine that based on each stock. But in the case of Microsoft, it is broken through all of them.
Gotcha.
But Amazon was one that we saw was still above its 100 and its 200. So that's telling me that the market is still supporting this trend. And from that list, I saw that because the price was green, price is
Mm-hmm.
still here. So if I'm looking for a particular trade where I can know that the market is supporting me, look at this, right? I mean, price literally hammered on there. So I don't care if you're trading a 21, 9, whatever. This thing is sitting on the 100 and 200. I can see clear as day that it is reacting to these prices. So let's say price happens to open up and it's below that. Okay, we now bearish, right? Like if
Bearish. Yeah,
we get
yeah.
to, and let's say, and a lot of these gaps happen around earnings. Like if I put earnings on here, let's see, display events, earnings. You can see that these gaps happen around earnings, right? And you're
Yeah,
familiar
yeah,
with
yeah. I see.
gaps.
I see 'em.
So if you have a gap down, don't go buying that immediately, right? Because that's telling us there's weakness in the price. Let it find a bottom and then it'll recover. And
Okay.
then a lot of times you're like, well, where's the bottom, right? So if we didn't know where the bottom was here, all I had to do was go back in the past and say, all right, let me plot out a couple of places. So I'll say, boom, right here was a high in the past. And not only that, it had a gap here, but that little gap right there at earnings just so happens to be the resistance from the past.
Okay. Okay.
You
Yeah, I'm
see
seeing
what
it.
I'm saying here? That
Yeah,
gap
I'm
that
seeing it.
took off from.
Yeah.
And so
With
now
the
that we
position.
gapped up,
Okay.
and so in the case of a gap up, that starts a bullish trend,
Yeah.
but it's got to close that gap at some point. Okay. So when it gaps down in this case, that is the start of a bearish trend. So
Yeah.
once they gap down from there, everybody that knew this gap was here, they were just waiting on that close. And it came exactly, look at this,
Exactly. Right back to it. Right back to it.
right back to it. Right. So if we move over here, we can see, oh man, it's nowhere close to anything we're trading now. So, all right, well, we got to move up to the one next to that. So we can move up to where did it get another high, which is around here, because not only did it get a high, but we saw it gap down below that. So this is a critical level, right? And I'm just looking left. I have not looked to the right yet. I'm just looking left saying that, hey, based on this high that it had, and then it created a new high, but exhausted
Hmm.
itself, closed this gap. And then based on that, resistance broke out
Mm-hmm.
again,
Mm-hmm.
came back down, resistance. So
Mm-hmm.
this is key. This level right here is critical,
Yeah.
right? And boom, we right back here today.
Okay.
You see what I'm
I
saying?
see. Yeah, I'm
So
seeing it because
a
it had
lot of
3 or 4
times,
touches there.
exactly. And so let's say I buy it here. Let's say you want to be a trader. Let's say you're like, all right, based on all these technicals, based on the fact we got the RSI bouncing off here, we're starting to maybe catch some momentum. And the put call open interest ratio is lower, meaning that this is a ratio of puts versus calls. Are you familiar with options?
I am familiar with it, but I don't know it like that. I would like to
I'm gonna
definitely
break
know
it down for
some
you real quick.
because you can make more money in the puts and options, huh?
You can, but with
Okay.
higher reward, there is higher
It's
risk.
high risk.
Okay. So that does not go without being said.
Yeah, yeah,
I
most
made a lot of money
definitely.
with options, but I had to lose a lot in the beginning because I wasn't
Okay.
somebody that paid for courses. I didn't. My dad put me on those books. I read those books. It gave me the terms I needed to understand. And at that
Okay.
time, we didn't have LLMs. We didn't have ChatGPT. We didn't have Claude or Gemini or nothing. So I just had to Google the terms, and there was a couple videos on YouTube and just trial and error. And I
Got
found Bar Chart. Bar Chart was doing live streams, and when I would watch these guys talk about stocks, I started to understand the put call ratio and all of the options tools they were using. But this is probably one of my favorite option indicators because it kind of tells me how options are positioned. So
you.
without going into depth about options and confusing you, basically, most people that trade option are buying them, and what they're trying to do is they're essentially making an assumption of a price. They're hoping that the value of that option they purchase
It's
increases.
gonna go up.
If you
Hmm.
buy a call, that means that stocks you're expecting the stock price to go up.
Hmm.
If you buy a put, you're expecting price to
Go
fall.
down.
So in this case, if I come over here, right, if I see this, you can see that as price was higher, you can see that this put call ratio jumped up, meaning that more people were buying puts or
Okay.
selling calls because this ratio is puts divided by calls. So it's puts over calls. So in this case, if this number were 1, that means for every put, there's a call. So technically, because this number is lower than 1, there are still more calls than puts on Amazon, but we can see the level of that open interest here. So you can see here as price was high, you can see puts were coming. But as price dropped, those puts started selling, right? So another example here, let's see, you can see, boom, price dropped here, right? Price
Mm-hmm.
dropped. And then
Mm-hmm.
notice how many people started loading up on calls. Calls. Price is going up. Calls. And then
Price go up.
they're like, maybe we're exhausted. Oh God. And this is what's called man, I don't want to confuse you with all these terms, but right here is an RSI.
Oh,
Yeah, this is an RSI bearish divergence because you can
yeah. Okay.
see here.
Yeah, I know about diversion. I was learning about that. Yeah, yeah.
Okay, so you can see here, right here, the price and RSI made an extreme high, right? But if we look here, when it tried to make another high just as close as that price, look how low this RSI
Yeah,
was.
it went down.
That's a bearish divergence.
Diversion. Yeah.
So that right there was probably the signal that told these folks puts. So you can see this increase there. So are you understanding why this put call ratio went up on the open interest?
Okay. Okay. On the open interest, okay, this went up as the RSI was going down.
Correct, but that's because of how the options market was positioned. Because I don't
Listen.
want you to
Okay.
think that options open interest is a dictator of price. It's just
Correct.
telling me positioning.
Yeah. 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 Yeah.
They could buy all the calls they want. It will not force the price to go up. So you can see all these people buying calls, but time decay, if it's not going anywhere, they could be losing and maybe they start selling, or there's more put stepping in to get this lack of momentum here.
And that's what caused that's is what caused the diversion.
Correct.
Yeah.
And essentially the divergence was that lack of momentum going into this price. Because you can see here, this price had a lot of volume following, right?
Okay.
But then you can see that it didn't
It
have
just
as
slashed
much
out.
volume,
Yeah.
right? So these indicators are essentially making it easier for us to process the world
What's
of data.
going on? Yeah, yeah,
You know what I mean? There's a lot of data points that we can process here, and we can screen for a lot of this stuff. But these indicators are built essentially for us to collect all that data and have a visual point of reference.
yeah. All
And
right.
so looking at this, are you good up until this point?
Yeah, yeah, I'm good. I'm with you.
Okay. So in this
And only
case,
because of reading those books and stuff.
let's go.
Yeah, yeah.
That's step one, man. You got to know the vocabulary. A lot of people
Yeah,
skip that start. They just think they can
yeah.
just hop right in here and start looking at charts. But if somebody's explaining something to you and this is Chinese, I can sit
Yeah.
here and talk to you for a whole hour.
And
If
you
you
want
don't
to get it.
understand the
You
language,
understand what you're saying? Yeah.
what sense does it make? Right? So, in this case, if we're looking at Amazon, right, and we see this RSI bearish divergence, right, and prices rejecting from these, from getting higher here, we even see the lack of volume that it has. Boom, this, and then it crosses below the 20-day moving average. All right,
Hmm.
it's going down. Boom, they start jumping into these puts to take advantage of the decrease in price.
Okay.
Okay. And so, boom, one thing you see once price hit these levels and they notice it's not breaking through, they're like, maybe I can
Hmm.
take profit. Amazon's got his little Prime Day coming up. I don't want to stand in the way, And so, and the market is telling us that they're trying to hold this price here.
Okay.
Right. So, this is just how, and if I want to trade it, I can do that. If I want to buy Amazon, like let's say you look at Meta. Meta's a stock that's been trading down, trying to catch its footing. Another thing you can see that based on just recently, it's not the lowest this put call ratio has been, because it's definitely been much lower, but it's the lowest it's been, I guess, in about a year or so. More people are saying that the lower Meta goes, the more they want to keep loading up on call options. But for me, it's not necessarily showing me a bottom. It hasn't recovered any moving averages. Even when it did, it rejected the 200-day. So it's just like, for me, I'm the type of guy that I like to see that it is starting to show signs. Like right here, it pulled all these moving averages down and then reclaimed its 20 and then took off. And honestly, man, the 20 is one of the most efficient moving averages. People don't even realize this. If I put on here just the 20, and I do that, okay, just the 20, boom, above the 20,
You
closing
buy.
multiple times bullish,
Yeah.
right? Closes below it, weakness, weakness. But earnings is coming up. You don't want to
Uh-huh.
stand in the way of that.
Say nothing. Okay.
Just let it confirm whatever after that point. But gap up, okay, boom. I just need to wait for exhaustion because we got to close that gap, right? And then once price closed below the 20, boom, we're going to close that gap. Closes above it, goes up. Now, these are short-term trends, but if
Yeah.
you're just focusing on that, boom, price gap down, we're closed below the 20, let it bleed, right? Reclaim the 20. All right, let's take a momentum trade,
And
right?
this on you on the daily?
This is the daily.
Okay.
I'm not one of those guys. I don't dive deeper than this. Like, I'm
Okay,
on the
got you.
daily. I want to find large trends. And like when I'm really setting the chart up, I want to do that based on like weekly and monthly, because a lot of that other stuff is noise,
Yeah, yeah, yeah.
but
Yeah,
if
yeah,
I'm
yeah.
going to chart, I want to do it on larger time frames. And then even if you were to, like, let's say we charted off of this chart. Let's say we move this here and that there, and then we'll say this is a range, and then just somewhere in between here,
Right, yeah,
say
right there.
say right there. So as I move in on this, let's say the daily, um, you can see that, all right, it's creating these windows to say that if we can't reclaim this, then all right, we're going to stay in this little range. And if I want to buy this, and let's say I want a stop loss, well, this seems to be that hey, if it crosses this
Mm-hmm.
line, it could potentially make a lower low
Mm-hmm.
because anything lower here
Lower
is
than
only
that.
showing signs of more weakness, right? So it's like for me, number one, this just isn't even I wouldn't try to like if I'm trying to do options, I want to do more extremes. And this for me is a little bit of an in between. It's still trying to it has room to go down, it has room to go up, and I'm not trying to figure out which way we're gonna go. But if you're an investor, you accept the risk of, am I okay with this thing falling back to five or what is this like 485,
Yeah.
right? Because that would be the all right, I'm in this dip, might as well buy more, right? But if it can't hold this level, then yeah, it's not looking too healthy. But I know Microsoft is probably one of the biggest names that
Best.
watching right now. And let's put back on the moving averages and stuff. There we go. You can see the 20-day is starting to curl
The
down.
cross is starting
But
to, okay. Okay, now is it finna cross the 50?
now this is the blue is the 50. Yeah. So the
Okay.
20 is about to cross the 50.
Okay.
And you can, let's say we're saying that this is a level we want to pay attention to, and also this one. But let's say if we look at the weekly and we chart some of these levels on the weekly. So let's say here and also here. Seems like a bit of a range based on the weeklies. Yeah. Because we'll need to hold this range to not fall back and test these levels anyway. And
Gotcha. Gotcha. I see what you're saying.
and so basically, if we can't hold where we are right now, and we're on the 200 weekly, and
Yeah,
for the
yeah.
most part, I think it's held that level. It dips below it in times, but if we go back to the daily, we can see we're right on that level. We just plotted off the weekly. So
But
in this
it
case,
gotta it look like it's holding that level though.
you see what I'm saying?
Yeah,
And
yeah,
look at the
yeah.
candle too, because
Yeah, that's what I'm saying. Looking at the
it
calendar, man,
wicks
that's a
up in
hammer.
here.
That's a hammer.
And so it wicks down in here, and then bulls pull it back, right? To
Yep.
say, hold up, now we're gonna hold these levels. Now,
Okay.
let's say we want to look at this stock. Let's dive deeper into Microsoft. So it's like, oh man, is it gonna hold? Is it gonna hold? So we can come over to options dashboard. So if I want to trade options, this is the first place I want to look. So we can see here the volatility is average, but it's rising a bit. The trend, obviously, we already know it's bearish. All the moving averages are literally going down. Um, so what we look at mostly is this put call ratio, right? So we can see that more positions are falling into calls as price moves down here. We can see where that open interest is too as well. So we can see that most people are about 30 days out. And the next would be the next in August after that. And earnings is right in between them, right? So people are going to be trading that trade up to earnings,
Up to earnest, yeah.
and then they'll be trading what comes after earnings as well. So this expected move gives you a range, so you're not being, say, unrealistic. So in your expectations, you can come here and say, well, if I'm going to buy the August strikes or the August expiration, my strike needs to be within this range based on options trader positioning. Does that make sense? It gives you a realistic range, so you're
Yeah,
not
yeah, I see what you're saying.
you're
Yeah,
just
yeah,
out
yeah.
here like, oh yeah, I think Microsoft's going to run back to 450 before earnings. It's like, well, based on options market, they're not pricing that in because earnings is
Mm.
right here, and it's saying at best on the range of expected.
In between them prices.
Exactly. Exactly. So if we're going to trade earnings, we're looking at least maybe I mean at least on the August is the 418
Okay.
is what we see right here. Right? And so it gives us a range, so if you wanted to buy calls, it needs to be realistic. Right? But if you want to see where those Traders are positioned. So we know by the put call open interest ratio, they're buying more calls. But where and when? We come down here to the and pop on this volume graph. So it depends on what you're looking for. Are you looking for that outdated, like maybe those leap types of contracts? Or are you just looking for where's the party now? Because you can see these DTE right here, days to expiration. Once you're within 30 days, that theta accelerates.
Okay.
So you would need Microsoft to move and move soon in order for you to profit on this trade without losing every day that it doesn't. Does that make sense? So
Okay,
if
so
you're
now
doing, go ahead.
how, how does it, okay, as far as the, break it down to me as far as like how it goes as far as your risk to reward on a
So
short.
that's different. Oh man, that's different. So it depends because when you're trading options, like you're somebody that's buying options, that you can't guarantee what's going to be your profit. So
Hmm.
it's like I just tell people if you buy options, you need to understand that you can lose everything. You
Okay,
know,
so how many is there a certain amount that I would have to buy?
so, oh, okay, so like let's say you wanted to make this trade. I'll show you kind of what that looks like. So let's say you are bullish on Microsoft, and you're trading it, which is somebody that would be picking this 717 because you can see there's quite a bit of open interest here, but most of it's on the put side, right? Or no, most of it's on the call side. Yeah, because we got the total right here. The call open interest is 319. The put open interest is 169.
So
And
more
same thing
people,
with here, loading up on calls. Because, like I said, we already know they're loading up on calls. There's more calls than puts right now. So the
okay.
open interest here is telling us the expirations, where that open interest is. So let's say you're going for like a safer trade. Now, these are going to be more expensive because you're buying more time. But I just want to show you these as an example because we can see here that quite a few people are positioning into these December and January expirations. So here's what that means. Let's say we want to go for the January leap. Now, in this case, we're going to go for stacked side by side. We're going to do 20 strikes volume graph. So this is the January expiration. I'm looking at calls and puts, and the volume graph tells me where this positioning is. So if I want to buy a 450 January call, it's going to cost me $2,000 or yeah, 2,000, right? And so I can actually pull up this chart. Let me see, options chart. Yeah. Can you see this chart here?
I'm looking at it.
Okay, let me change this to 1 hour. So you can see here that because the options volatility was low and the price is low, so is the call option.
Okay.
So with that being said, though, this thing is expire. It's going. Most of these are going to be expiring worthless. So what happens is most people come in here and say, "Oh, I'm gonna buy this $2,000 contract." And I can expect to make, you know, 3,000, 4,000, whatever, right? But what happens is well, actually, let's see. Yeah, this is a $2,000 contract. So you're getting a discount based on the past, but because this thing is losing value daily, it's
hmm
going to continue going down. So that's why I said when you buy these contracts, you do want to make sure that you have that momentum in your side. You don't
Gotcha.
want to be buy these and be waiting.
Wait. Okay.
You know what I mean? So a lot of times when people may just see a price that's down, they're about, I'm about to go load up on calls, but if I don't have a confirmation that the price is moving, then it's not in my favor, right?
Mm.
Because at that point, I'm just waiting and this could continue losing value. Okay. But that would be the price of, trying to profit off of the increase in price. Now, if Microsoft starts to move, then you could essentially profit from that. So I actually show you um what that looks like. Let's see where the open interest is on these calls. And we're looking at the January expiration based on the put call ratio. We saw there was a lot of people there. So we're looking on that expiration. We can see that most of that open interest is that even the 500 has a lot. Now, what we just looked at was the 450, but if
450.
you
Yeah.
wanted to buy the 500 contract for next year, right, January of next year, it would cost you 1,500. Okay, so when we open that up, you can see what that looks like. Hold on, let me move this here. So you
And
can
okay,
essentially
and that's saying that that price is gonna be at 379.
the price of the stock right now is 379.
Okay.
Microsoft is at 379 now. And
And so
so in order
go
for
ahead.
you to essentially profit from this trade, Microsoft needs to move towards 500. And this is based on expiration. So if Microsoft does not hit expiration, you lose money, right? You'll
Got it.
lose everything you put in here. That's why I said the risk reward in this situation is that you can lose all your money if the stock doesn't move.
Yeah.
And so that's what, like, what it costs me to buy this contract, I can lose it if Microsoft does not get to
That's
that price.
not good. Yeah, yeah, yeah,
Now,
yeah.
in that time, the
Mm-hmm.
value of your contract increases based on
More.
volatility,
Yeah.
different sort of extrinsic factors that can increase your premium. Because you got to think about it. It's like having insurance, right? Like if I have insurance, if I'm an insurable person
Mm-hmm.
and I buy insurance, the healthier I become, like let's say I pick up a healthy lifestyle, meaning my lifespan increases.
Mm-hmm.
People, the value of
Of you personally in your lifestyle, it's gonna go up.
exactly,
Yeah, yeah.
because at that point, like, man, this is a good insurance policy. This guy's gonna keep paying, and we might not have to pay out on this policy, right?
Mm-hmm.
And so it increases in value. But if I'm somebody that starts smoking cigarettes and eating
Mm-hmm.
all this bad food, then essentially the value of my insurance goes down because nobody would want to insure me. They're like,
Yeah, yeah,
yo, I don't want to buy that contract. It's going
yeah.
worthless. It's like
Yeah.
that person's gonna die. And that's the
Yeah.
same thing with these contracts. So if you're holding a $500 Microsoft call option and we're nowhere near that price, then it's hopeless, right? The value of you is going down and what you're holding is losing value because it's almost unrealistic, you know?
But see, this is not unrealistic though.
No, no, saying that Microsoft could hit 500 by January is not unrealistic, but you need the stock to move. You can't
Move.
wait,
Yeah, yeah. Yeah.
right? And sure, it could do that. But let's say you want to trade the momentum. Let's say earnings is coming up and you want to essentially trade them. Now, I will say, man, the best strategy is selling, but that's a whole different level. Selling
Okay.
options is where the money is because if a lot of these options are going to lose value, when you sell them, all you got to do is wait for them to lose their money and then you're
Mm-hmm.
just collecting a premium. So, and if I wanted to sell this particular call, I would collect eleven
Yeah,
hundred
yeah, yeah.
dollars, but I need to own 100 shares of Microsoft in order to do that. But there are
So
different.
you
There
couldn't
are
you couldn't do it how we just looking at it right now. You couldn't
Yeah,
pay.
that's the different levels. So what I just explained is the buying options, like buying long calls and buying long puts.
All
So
right,
you gotta
my
go.
bad. But yeah, I gotta go. What's up?
Okay.
When can we connect again?
Man, anytime, man, just give me a shout. I'm always available. I'm always.
Okay, okay. Let's set up. Let's when you gonna be available this week? Cause I
Um,
want to work around your schedule. You see what I'm saying?
yeah, let me shoot you an email and let me turn off this stream. Let me see how I stop.
Okay. Yeah, my bad. We gotta lock up this room.
Okay. Well, I'll shoot you an email and then we can
Okay.
schedule a time. All
All
right.
right. Appreciate
All
it.
right, brother.
Appreciate it. Yeah,
Always a
I'm gonna
pleasure,
get back to
man.
reading my books, bro.
All right, let's go.
All right.
Let's
All right.
go. And then, like
Appreciate
I
you.
said, I'll send you the link to this video once it's on YouTube too.
All right.